Dear friends, hello there. How is everyone doing today? Hope all is well. Thank you for taking time to attend this session today. Just so you know, we have had overwhelming response from our investors, and there are lots of people attending this call today. By the way, my name is Raghu, and I have interacted with many of you in the past, and I manage investor relations at Orion and Nanban Realty. We have assembled here today to learn more about our land fund, which we are launching from tomorrow. I know many of you are eagerly waiting to hear more about this unique fund. The land fund is one of its kind, and we are extremely excited to present it to you all today. Our entire management team is present today, and they will introduce themselves shortly. We have a full house, and a lot of details will be provided, so please pay attention. Before we get into discussions, let's look at the agenda for the day today. So there are a few topics we'll be covering today. We'll talk about who we are, and then we will provide more details about the fund. Then we will also talk about how to do the next steps. We have a guest speaker today, Edward, from DB2RE to talk about current real estate market trends and land opportunities. We will also have a separate Q&A session at the end. We will not be answering any questions during the panel discussion. Feel free to type up your questions in the Q&A box, and we will answer them at the end. Thank you once again for taking time to attend this on a busy weekday. Without further delay, let me introduce Prasanna, CEO of Orion and Nanban Realty. Here you go. Prasanna, please.
Thank you, Raghu.
Take it from here.
Appreciate. Thank you all investors for joining today. We are super excited. We have the executive team here with a special guest we'll introduce soon. All of you, I guess most of you know about us very well. We are one of the leading real estate investment management company in Texas. So we don't need further introductions about us, just a high-level view of what we do and what we accomplished. We just want to capture that in this part of the session, and then we'll have a quick introduction. As you know, we are driven by giving back to society. We do a lot of charity work, part of the Nanban Foundation. We currently run 24 projects actively helping society and humanity. At an organization level, we have over 10 years of experience in the commercial real estate space, mostly in Texas. It's not just the experience, we also delivered exceptional, superior results to our investors. Overall, we have done close to $1 billion in transactions, predominantly in multifamily space and lands. So as of today, we have managed and continue to manage over 6,000 units. In that 6,000 units, 3,000 units have been already exited, and we currently have 3,000 units actively managing, and we continue to grow. When it comes to land, we currently own, as sponsors and as a family office, around 3,000 acres of land that has been bought with a vision to build communities around it. So that's a quick overview, but it is very powerful. As you know, it's not easy to build an organization to that scale in such a short span of time. That was only possible because of the trusted investors like yourself and the strong ecosystem of strategic partners we have. So as you know, our purpose and philosophy has always been strong, and it has been resonating to protect your investment and then grow your investment. So we live by that standard, and we have delivered that. Till date, all our investors, their investment has been well protected, like it's our own money. And then we also provided and delivered superior results than any S&P 500 or any other hedge funds. We do that by following our strict principles of investments. We buy assets in the best market. We buy assets that are surrounded by good schools, good for families, job growth, population growth, and it is proof against any recession and pandemic. And we have seen during the last pandemic, all our assets did exceptionally well. That shows that our principle and strategy is so strong, we have not lost money. And Orion stands by that and continues to deliver superior results. Therefore, your investment is protected and it will continue to grow. And a lot of our investors also invest in stock market. It's a sorry situation. They lost money quite a bit. But this opportunity, what we bring, are carefully handpicked in the best possible market in the entire country. And that's where we are able to see the results of our investments. I'm here to present and also to introduce our guest. My name is Prasanna. I am one of the founder of Orion and Nanban Realty. I live in Dallas. I have an MBA from Michigan School of Business and a master's from DePaul University, Chicago. I have a family with 2 kids. My wife, she works for JCPenney. And then I will hand it off to Raghu, who's our VP of Investor Management, and then we'll introduce our executive team.
Thanks, Prasanna. This is Raghu, and I live in Dallas, and I manage investor relations. Over to Shivesh.
Hi, my name is Shivesh Gowda. I'm a Dallas native too. I've lived here for about 20 years. Used to work for a real estate law firm, specialized in the mortgage domain. I've been working in the real estate industry for almost 20 years now. I've got a family, 2 kids, and my wife also works for a software company. I have an MBA from University of Texas at Dallas, and my engineering back from India.
Suresh? Thanks, Shivesh. This is Suresh. I'm one of the co-founders of Orion RE Capital. I've been have overall 25 years of IT experience, and by trade I'm a data scientist, and I live in Houston and have a family. And
So we are super excited to introduce our chief guest and also strategic partner for Orion and Nanban Realty. Without further ado, Ed, welcome.
Yeah, well, thank you guys. Thank you for having me. I appreciate it. My name is Edward Bogle. I'm a co-founding partner and managing partner at Davidson Bogle Real Estate in Dallas. My partner and I are both born and raised here in Dallas, so we're local natives. We have a team that's strictly focused on land sales and acquisitions, particularly in the northern Texas markets, but really across the state. We've got 34 professionals there, and all we do is focus really on land sales acquisitions. So y'all's land platform and what you guys are looking to do, it's right in line with what we do on a daily basis. So thank you for having me.
Thank you, Ed. It's very important for you also to give your perspective to our investors. You've been in this field for a long time. You know Texas more than anybody. So very happy to have you in this session.
Well, thank you.
Excellent. With that, as an organization, I would like to highlight some of the accomplishments from last year. As we stated about all the charity work we did, we also directly provided employment. We had close to 100 jobs that we created, staff that manages our properties. And then we also have direct payroll. We offered 12 direct payrolls today who help our organization in supporting investors and operations and technology, etc. And then we also directly, indirectly helped a lot of tenants during the COVID who could not afford to pay rents. So we feel good about that. Our organization is kind of indirectly, directly touching lives. From a business standpoint, I think we are one of the fastest growing real estate investment firm in Dallas. Especially, we have touched close to 3,000 units last year alone. And with 3,000 units, we exited. Just us as a family office with few investors, we have around 3,000 units of land. I think we can build a very large community in those lands as well. Also, on the investors network, we are growing nationwide. We started with few hundreds. Today, we have close to 6,000 investors. And then they keep joining us because they trust Orion executive team, they trust our principles, our vision, and then they also like the fact that we are doing the charity work. So that is bringing a lot of people. We don't solicit, we don't go and hunt for investors. They're all coming to us because of the integrity we have in our organization. At any organization to grow to this level, you need to have a solid partnership. It is a team sport. Together with our executive team, we have built extremely niche strategic partnership. And all those organizations that you see on this slide, they're all multi-billion-dollar companies. To work with those companies, it takes a lot to build that relationship, to build the faith and trust, and also deliver and execute. So that is what we have built, an ecosystem where it brings us a different level of strategic negotiating power with these kind of partners, whether it is lending, whether it is private equity, whether it is buying, etc. We operate at a different level. That's where we are able to create that edge to our investors in terms of giving superior returns. So we're very proud of what we have built today, which we feel that it is not easy to do for all organizations that are out there. And this is our footprint. We mainly operate in Texas, and we buy properties, as you see, in the highest growth and highest growing markets. Just to give a perspective why we love Texas, Texas GDP is larger than Russia's GDP. And then Texas GDP is the third largest in the whole country. But the growth rate of GDP is the highest in the country. And then Dallas County and the Harris County are the highest contributor of the GDP to the country. So we are right here in a place where we are seeing the growth that is not there in any part of the world today. So that's why you see the map where we bought the properties. They are actually supported by these strong fundamentals. So that shows that we are laser focused. We are not in Minnesota, we are not in Nebraska, we're not here. We are in one place where we can grow to a $5 billion company in the next 5 years. Just to highlight our recent success, we have delivered superior results. Superior meaning we beat all hedge funds and the S&P 500. This year alone, we sold close to $100 million worth of portfolio. And if you look at the returns we have provided our investors, it's mind-blowing. And next week, we are closing our third asset in Fort Worth that is yielding 105% return in 3 years. Slow and steady, it just delivered. And we always been so conservative. We thought we would do in 3 years around 45%. We did 105%. That's all because of the quality of everything. Its quality of everything means quality of acquisition, quality of management, quality of being disciplined. Everything yields this quality results. That's why we are so proud of our organization, our team, and our ecosystem. Raghu?
Yep. Yeah, team listeners, how are we doing so far? Keep typing up your questions. We will get your questions in the end, So, thank you.
With that, we are super excited today to launch the first ever land fund. Just to give a quick background why we are doing this, it's all driven by investors. They've been asking us, we need to invest in some land. You guys are only doing multifamily. Could you please bring top quality assets, land, so we can invest? Because we feel that investing in land is the best way to hedge during these conditions. So we listened to our investors and we came up with this unique land fund, which is really exciting. At the end of the day, our core philosophy is same: protect your investment and we want to grow your investment. So you can sleep well and then you can see big checks coming through. So we wanted to stay with that fundamentals very strong. Therefore, the fund what we created is going to fulfill those requirements. So with that, I would like to open for to kind of give an overview of the Texas market, why our investors should invest in the land. What do you see given the market? The interest rates are high, recession is coming, why they should still choose to invest in land?
Absolutely, thank you. So to begin, Davidson Bogle Real Estate, we're based here in Dallas. We go by DB2RE, the number 2. It's because my partner and I were both second generation real estate here in North Texas. It's important to us. It's been a part of our community, part of our blood and lifeline of who we are as people and the community around us. In North Texas and really throughout Texas as a whole, we're still very bullish, and it's really, you have a lot of kind of extraneous factors that are forcing and people are moving here. That's the biggest driver behind anything. And being in the apartment game, being in the land game, will only make so much of each. And over the last, I think, 10 to 12 years, we've had over 100,000, positive growth, population growth, year over year over year over year. Those people need places to live. And so I know single family, it's been a little bit harder because of construction, because of the land and development constraints really from cities, and also the physical, constraint of the land. And we've been developing maybe 40 to 50,000 homes per year. And meanwhile, the rest of it's really being absorbed on the apartment side. So in general, there's been a lot of great things happening. It's a very dynamic market. Pricing has shifted and changed a lot over time, but it's because the fundamentals are there. Successful projects are being developed. People are making money. It's great. And as long as people continue moving here to the state of Texas, to North Texas, to Austin, to Houston, your investment's going to be safe. It's very different. You're hedging your investment on, whether it be stocks or something else, because you hold and own a hard asset. And hard assets will always maintain a value, whether it's this year or next year. It can take a little bit of a pullback in the economy if needed, but at the same point in time, developments take time. So you could break ground in a day, and you're still 2 years out till you have something vertical. So it's a very interesting asset class to be in, and if you're doing it, you want to be in North Texas or throughout Texas as a whole.
Excellent. Yeah, Shivesh, what is your take on why our investors should invest, and given that you know a lot more about the interest rate situation?
So basically, I think we've seen how Dallas has been, or generally how Texas has been growing for the last 4 or 5 years. This trend is only going to continue just because of what Edward was saying. There's an influx of population coming in. The average median age is still very good. So the outlook for development in Dallas is still very good for the next 4 to 5 years. I'd say even all the way up to 10 years. Mm-hmm. I think why land is today a good option is because the way the cities are growing, the cities are now working with development partners to provide all the necessary, not just the infrastructure, but also the social aspects of it. So there's so much of mixed use kind of development, which we've seen already happening towards the northern corridor. I think this is just going to continue to grow. So given all of that, I think the outlook for land is so much better right now. And then there's just limited amounts of it.
There are, especially in markets where you really want to be, that have the dynamic ability with upside.
Absolutely. So our vision for buying land is just not buying land for the sake of buying and holding it for speculation. Every piece of land that we're looking to buy, we are making sure that there's a story behind it. We can get that land entitled, develop it, and then in turn, make sure that not only is our investors' money protected with just the land itself, but the improvements over a period of time is also going to be a good source of investment returns for our investors. So,
excellent. Thank you. I did not know Bill Gates is into real estate. This is a very interesting piece of information I wanted to share with our investors. So Suresh, you are aware of Bill Gates owning thousands of acres of land. You want to highlight what is the reason for Bill Gates owning so much of real estate?
Yeah, if you look at it actually, right, end of the day is basically investment wise, actually you want to see what's the safest investment. There is no better investment, especially during the times of actually recession and inflation, everything like that. Therefore, this is the best investment for the hedging against this one. And he actually owns over 230,000 acres of land across America, not just only Bill Gates and all other Warren Buffett and so many others actually are investing heavily into this particular farmland. Therefore, that's one of the best things actually to do that. And likewise, actually, as Shivesh and Edward said, actually, our investment strategy is not just only looking for the properties that are just for a long time, but rather with a business plan in mind. Therefore, that's going to be the way we are going to confident of achieving returns.
Excellent. Thank you, Suresh. One of the reason why investors also likes us is we are very data driven. We make decision based on a lot of data. We are not speculative in any manner, right? This particular slide is extremely important to demonstrate why investing in land is as good as a decision today than before. So in this graph, I want to highlight the correlation between various investment types and then how the dependency is between. For example, if you look at the REITs, and it is highlighted by a red box under S&P 500. What it means is REITs as an investment has a strong correlation with S&P 500. For example, if S&P 500 swings, that will have an impact of 0.78 on the REIT investments. So meaning if S&P 500 goes low, REITs will follow. REITs will also has a higher possibility of going down. So likewise, if you go to any cell and then try to find the correlation and dependency of your investments versus others, you will find out that the real estate in specific has the least dependency and correlation with S&P 500 or CPI. So let's take up a real estate data. The row real estate NPI, if you look at it carefully, it is least correlated with CPI, 0.26. So real estate is solid, strong, it doesn't move. Whatever happens CPI, and S&P 500 is 0.26. And then likewise, if you go along the columns, even if you're invested in REITs versus our real estate, if REITs goes down, our real estate won't go down. It is supported by this strong correlation here. 0.24 against REIT, S&P 500, 0.24 between real estate and REIT. So, and we know that REITs are not a superior returns either. But the real estate, what we have in Texas, the best market in the world, has the lowest correlation to any other alternative investments you have. That means real estate is strong, it doesn't move because S&P 500 moved. So that gives you assurance that your investment is solid, you can sleep well. So this is all about us making this kind of decision based on data, not just simply saying, Texas is beautiful, Dallas is great, let's buy some beautiful property. We don't buy beautiful properties. We buy properties investment based on data. So I think you should all save this slide. This is very, very important. Thanks, Raghu, for putting this together. Also, again, a lot more data points on why you should invest in real estate and land, a solid hedging tool at this point of time. A lot of our investors who are watching today, you are invested in stock market. I'm sure you lost a lot of money too.
Yeah, either directly or indirectly through 401k, or you are in stock market,
yes,
no matter what, right?
Yeah, exactly. It's a good point.
Yeah.
Even in 401k, your distribution is into Apple, Amazon, blah, blah, blah. I think they're all suffering.
They're all suffering. Right? Yep.
Yeah. So, and then why Texas? We have another strong fundamental. As Shivesh mentioned, the young adult population growth in Sunbelt area is much higher than any other state. So you can see those 4 block circles, they're all in Texas.
True. Yeah, and also the submarkets in Texas for the most part. If you look at all the cities, take Houston for example. Houston for a long time used to be just a one-trick pony. Oil was the only economy driver in Houston. That's not the case anymore. Houston has become so diverse. Same with Dallas. Dallas is so good when it comes to IT, the services industry, medical. What am I missing, Edward?
Real estate, natural resources. It's really every sector is pretty well.
And then what's happening in Austin, we all know, right? The whole technology hub, startups, venture capital. It's Austin's kind of making its mark right now as well. But obviously, Dallas and Houston are a little more better positioned than Austin because Austin still doesn't have that infrastructure. So that's why we are very, very bullish on Dallas. And I really like Edward to talk about what's happening in the northern corridor.
Absolutely.
380 and beyond, Prosper, Salida. What do you think the outlook is like?
Well, I keep using the word dynamic, but it changes rapidly. And so Texas as a whole, everyone people are moving here, they're moving here, they're moving here. It's better to drive into the facts of why they're moving here. It's not just because we're lucky and then they're just happen to be all coming here. It's really, you've got a great business climate. So, look at taxes, look at cities, municipalities, look at incentive programs, not only from the state and county and city levels. I mean, those are all big things that really save, large companies a lot of money. And then from there, you have really a tempered climate. Even though it was pretty hot this summer. But at least it was hot and not, something else. And really, you've had a lot of Fortune 500, Fortune 1000 companies move to North Texas. And it's because you now have a workforce. It's become more established, I would really even say, on an international level than it was even 10 years ago or even 5 years ago. And you can look at the Nebraska Furniture Marts to Goldman Sachs to, it's not just a retail component and it's not just, a big banking component. You have very large companies that are well established, have great balance sheets. They pay well, they pay employees extremely well with great benefits. And that's why people from around the country, much less you go to a couple states that have quite the opposite, where you have large income taxes, you have a lot of regulatory. Texas as a whole, it's very friendly to landowner, very friendly to landlords, but also protects the rights of tenants. So it's a good, fair, equal balance across the board.
Absolutely.
Makes her a great investment platform, and really everything is above board and nothing's hidden. So.
And just to add, right, people move for various reasons. One is obviously the jobs, high-paying jobs, as you mentioned, and the cost of living. For the cost of living as we compare to the other states, for example, we were in New York last week, like people are paying like over $4,000 to $5,000 per month rent, just only like 600 to 700 square foot. Whereas the cost of living in Texas, I also know, not to mention no state tax, obviously it's one of the attractive places to move in.
Yeah,
Absolutely. I think overall it checks a lot of boxes, Texas as a whole. And then as you see our footprint of land, some of them are owned by our own family offices and some are owned by our investors. We are focusing on high growth corridors. We're not buying a land because it is available. As Shivesh mentioned, we're buying a land with a purpose, period. It is not for flipping. So therefore, all these lands, what you see and what you're going to see that's coming in the future, as a business purpose to create value for our investors.
Absolutely, yeah. This is where we really use DB2's expertise. They have been fantastic in guiding us through this process of where to look and what to look and what kind of development partners we need to work with. We'll just quickly ask Edward about this particular piece of land that we're under contract. It's on State Highway 114. Why don't you tell us something about that piece of land and what the future looks like for that land?
So it's extremely well located. To the North Fort Worth market in the Alliance Corridor is a fantastic corridor. It has all the fundamentals you look for in a community, in an area. It has fantastic growth and some of the highest growth. It's, the pockets there are incredible. The amount of homes coming on around it, and not only and it's not all $1 million homes or $200,000 homes. It's got the mix of everything that you need, really, for good fundamental societal reasons. That you can go develop retail, you can go develop office. It has a great infrastructure between BNSF Intermodal, which is one of the larger drivers for, I would say, North Texas, but BNSF is right there. They unload, I think, 1 million carts a day. Out of that facility.
Alliance Airport is right there too.
And then that's partnered and piggybacked on the Alliance Airport, which really allows you to fly your parts and pieces from Japan straight here put them together,
Wow.
and then sell out without a
Right.
tax. I mean,
Wow.
those are
God.
great things that that
Right.
make people happy and why you want to move a business here. And as you move businesses here, you're creating the jobs. But that the housing growth there is I mean it's I keep using the word incredible, but it is so fast.
That's right.
Lennar has one of their top communities, probably in their entire portfolio across the nation. They're in Sedera Ranch, just to the south, which our property will connect to.
Eventually.
We sold the stuff to Green Brick and Taylor Morrison, who did it first JV. They're both publicly traded companies. They bought, actually, Green Brick's bought over 1,800 acres from us just to the southeast of this. And then Alpha Ranch will have, D.R. Horton, Pulte, you go out there, you already see the homes up. And then you look at the dynamics of the intersection. So you touched on infrastructure.
Yes.
Infrastructure is a driving factor of land value.
Right.
And there are a lot of others, but infrastructure is really, really big. If you can't get there, it's hard to sell.
Yeah, that's right.
It's got great frontage along 114. 114 really runs you up to 287 to Decatur and further north up to Wichita Falls and further.
Sure.
And then back across to the DFW airport. You're probably maybe a 12, 14-minute drive to the DFW airport, it's real big for housing. It's great for travel. It's great for all these other reasons why execs move to North Texas, is because you can get to 3 hours to New York, 3 hours to LA, 2 hours to Chicago.
We're, bang in the middle.
Yeah,
So.
2 hours to Mexico, the beaches of Mexico. I mean, it's really not too bad.
That's
but
true. That's
but
true.
114 is just one of the best thoroughfares, and it's going to be a high growth market with lots and lots of activity. So, and great school district.
So we thank you for that opportunity. I think it was a off-market deal.
Yes, sir.
We are buying from one of the highly established, probably one of the largest developer in this market.
Probably the largest developer in the state of Texas.
So I think investors, we will be thrilled when we give more details about this land, and that opportunity is coming to this fund. Shivesh?
Yeah, absolutely. So the good thing there is we were able to get into this project much before everything is being put for it, right? Yeah. So we are basically getting it into it at a very, very nascent stage. Now the developers are going to come provide all the infrastructure. So by the time we get to what we want to do, that piece of land is going to have everything that we need.
Yes.
So,
and good commercial corners.
And good commercial corners. So we're really thankful to DB2 team for bringing in. This is the whole reason why we have the strategic partnership. Just not for this next 2 years, but for the next 5-10 years, they have a very good vision of where the city is going and what areas to look, what areas to avoid, which cities are good to work with. So that's where we really want to leverage this expertise, and DB2 has been great to work with.
Well, thank you. I appreciate it.
Great. Thank you for being part of the journey with us to create value for investors. They know that we bring really top quality assets and investment opportunities, and that's only possible because of partners like you.
Well, thank you. I appreciate it.
Just a glimpse of the slide deck where we are showing some of these properties that we talked about are going to be part of the fund. That means this fund is going to be probably one of the best fund in the entire Texas market. I think we can challenge anyone for that, because we spent lots of time and effort and negotiations and research identifying this. So they're going to do extremely well.
So this is a piece of land that is probably the largest available tract left in the DFW area. This project also came to us off market, and myself, Prasanna and Suresh, we jumped on it because we saw the potential. We're already working with the city. This has the potential to become a master plan community. We could be putting anywhere from 1,300 to 1,800 homes on it. It's a 10-year project. And the city also is very excited to work with us on this project because they have a plan. Denton's pretty much grown in all directions. Mm-hmm. This is the only quadrant that is left where you can actually put some development and bring people in. So that's another piece of land that we're bringing into this fund as well.
Yeah, great. Yeah, I think I see a lot of jewels in this crown going to be even the 35-acre Prosper, which is only 2 blocks from the PGA headquarters. People who have seen a Legacy West kind of a atmosphere, we're planning to build a similar community there, working with the city of Prosper. some of the builders like the Trammell Crows of the world wants to partner with us. So we're pretty excited about that. Just 3 lands alone here, we're talking about a $1 billion of potential projects. We're talking about maybe more, just 3 deals alone. Okay. So we have like that 2 or 3 more lands in the pipeline. We're still, evaluating and then researching. If they qualify, we'll probably add those into the fund, which means your one investment is going to get diversification across different lands. Yeah. So that's the beauty of our fund that you have designed and engineered. How do we build diversification, superior returns, and still be able to protect your investment? So all that is actually factored in this fund. People ask, where are you buying the lands? Why do you buy? How you buy, etc. We already touched on it. We buy only in the best market, which is Texas, which is Dallas and Houston, Austin, nowhere else. We see high growth potential areas like the job growth, population growth, all that Ed mentioned about. We only look for off market. We generally don't go for listed. I think we see that there's a value lost by the time it hits the market. So we have partnership with the DB2. So we buy off market deals. And exactly like what we said, relationship is what we value. We built. Because of that, we're able to find the best deals in the market. So that means you're going to get the best results investing with us.
Absolutely.
We have a very clear entry criteria and exit criteria. We are buying the lands with a purpose, meaning we will do the horizontal development, work with the city, get the entitlement done. Either we do in-house development and construction, or we work with the best in the development world to work with to do the vertical development. So those are the 2 options we have. So we will offer that option once we do the development, the land is ready for vertical, then we can recapitalize, you can participate, or you can exit.
Absolutely. So, I think that right there is the added benefit. What Prasanna was saying, right? We'll acquire the land, we'll get the entitlements, but the second part of it will be where we have the opportunity to develop the land ourselves and still bring back that opportunity back to you again. So that's a very, very important aspect of this land fund that we're launching.
Thank you, Shivesh.
Prasanna, I had a question on that. When we say we are going to do development, are all parts of the land we are going to do development, or some parts can be sold to other developers as well?
No, good question. See, any investment, it has to bring strategic options. When you have more than one option, you can choose the best. So in this land investment, we have 3 or 4 different options. Like 1 or 2 we mentioned just now.
Okay.
There will be multiple options. You can take an example of that 825-acre Denton land. Let's say we did the development, and then we can carve out half of it and give it to another builder for a better price and maximize our returns and return that back to the investors. You can still keep the remaining, and then you can still build something totally different that can create even significant value. That is one of the 4 options like that, right? So it brings a lot of options to the table. So we will choose what is best for the investor.
Yeah. Awesome. The idea is we will look at doing joint ventures with experienced players in the market. If there's a piece of land that's good for industrial, it can be zoned, the city is willing, then that's the route we'll follow. If it's good for multifamily, then Orion can take the lead because that's our area of expertise. Mm-hmm. We'll find that niche and then go work. But at the end of the day, the whole focus is on what is the best return that we can get to our investors.
Awesome. Okay.
So the next segue, Raghu, we're going to play that video of the DNT land.
DNT land.
And I think that project is getting a lot of attention. As we mentioned, the Trammell Crows and then larger developers, builders wants to. So I think that video will be very exciting. Let's play that. Okay. And then after that, we'll continue to talk about our funds.
Prosper North Star, presented by Orion and Nanban. This 35-acre property located in Prosper ISD is slated for mixed-use development, which would include hotels, retail shopping, restaurants, and multifamily. The 380 corridor and the PGA headquarters are only 3 minutes away. Downtown Dallas is only a 40-minute drive away. Frisco can be reached in 15 minutes. Here are proposed designs for development on this land as well as a 3D model. This is the aerial view of what the development would look like once it's completed. We will also be adding more land parcels with specific business plans into our fund.
So these are the projects that we are planning to develop on the DNT land. It's going to be a multi-use, with a high-rise condominiums, a hotel and retail, probably around $300 to $400 million project. On DNT, you can't find land on DNT today. It's very difficult. So this is going to be super exciting for all our investors. We're really happy for that. So this will be part of this fund, going to be. And then this is the master plan community that Shivesh was talking about on the 825 acres land. We are already working with the city and the architects and potential partners. And another multifamily development opportunity we are working on, that is in Frisco and McKinney. If everything goes well, this will be part of the fund as well. And then let's jump into the fund overview, Raghu. And then, can you give an overview of the fund, what kind of returns and etc. Then open for question and answers.
Sure, Prasanna. This fund will have 8% preferred returns, and once the preferred returns are met, the remaining profits are shared to the investors in the ratio of 70% to the investors and 30% to the sponsors, that is GPs. And we have kept about 3 to 7 years as an average timeline, but we believe that exits can happen a lot sooner. And on the right-hand side of the slide, you can see our investment criteria. And if you go to our website, you will be able to look into all the details about the specific fund, and also we have put a frequently asked questionnaire there, so where you will be able to read all about the other details.
So Suresh, I believe we are being very consistent about the preferred returns. We talk about fund 1, 2, and then land fund in terms of preferred returns.
That's correct. So far, actually, have exceeded the preferred in 8% preferred returns, especially in the 2021. We have paid continuously all the quarters till date. Especially want to talk about, some of them probably may not understand what a preferred return is 8% preferred returns means is depending on how long the whole period is, let's say 3 or 4 years, whatever the period is. Therefore, especially in this particular land fund, there is no cash flow. But nevertheless, actually, let's say property is sold actually after 3 years. That means that 3 times 8 is 24%. The first 24% of the returns will go to the investors. Anything over is going to be the one, actually, the waterfall distribution, everything will happen. Therefore, so far in all the properties, all the funds that we have done, it's already been paid out of 8% or more. And we are confident about the same thing and here as well.
Thank you. So I know a lot of you have invested in fund 1 and 2. So we are keeping the preferred return same at 8%. It's not easy to sustain 8% preferred return we are able to deliver. More importantly, the difference between fund one, which is a multifamily fund, fund two is also multifamily land fund. Our projections is when it comes to annualized return, much higher than the multifamily fund, just because the value we're going to create through all this development work we're going to do is going to be much superior. So we are projecting between 2 to 3x multiple. Generally, we project 2x multiple for the multifamily. For land, we are giving a range of 2 to 3x multiple. So I think that is very attractive return projections compared to what we have seen in the stock market. Many people are underwater. So I believe with all the reasons we said, we talked about being safest and then being driven by strong fundamentals. We believe that investing in this land fund is a better choice. But we don't solicit. We provide all this data. We provide all the information we have. We educate you, and that have been our success factors. We always educate, and then our investor make the decision. And this is another probably one of the best fund in the market today. So please feel free to contact Raghu and his team if
Prasanna, I have
you
one
want to get
question.
more information.
One question, we were talking about 8% preferred. I believe since there is no cash flow coming in, the distributions are made as and when the properties are exited, right? It's not like a quarterly distribution like we have in the other funds,
That's correct, Raghu. Yeah. Therefore,
Yes.
when one of the properties may exit, therefore the distributions will happen at that
At that
point of
time.
time.
Okay. Yeah,
And
just to
also,
clarify.
one of the property that we acquired last year, actually the land that actually we exited this year, we made the overall investor returns over 2x in 1 year. Therefore, as Prasanna said, actually it's going to be like a 2 to 3x. That's because the development, once the entitlement is done, usually the valuation is 2x. That's what we are expecting to hear.
And then there have been some questions about how do we manage capital and expenses. So we have a three-pronged strategy. One is we plan in such a way that the initial equity, the tranche we create, should be enough to satisfy 3 years of P&I and any development expenses. So we already planned that ahead of time. And then after 3 years, we need a little bit more capital. As we discussed that option we talked about, we can liquidate a portion of the land, or we recapitalize portion of the land, bring that money, and then manage the expenses. And lastly, if needed, we'll do additional equity raise or capital call to the investors. So if you look at the strategy, our investors are at the bottom. We don't touch them until we really, really need them. So we have 3 years of cushion. And our development plans are pretty much done by 2 to 3 years. Yeah. So I don't think you should worry. Secondly, none of you are going to go on the loan as guarantors. We are taking risks. So that is another differentiation. If you go and invest in other lands, most of the times you will end up as a guarantor. So we want to protect you. Just like in multifamily, as you invested with us, you're not liable for any of the debts, right? Mm-hmm. So same thing here. We keep the investors first. We want to protect you. So that's how we manage the capital for the land.
And even on the interest side, the idea is to keep the debts on it. Unlike multifamily over here, the idea is to have equity as a larger portion in our capital stack. So the idea is to have 60 to 75% of equity, and then keep debt to just about 40-25%. That way, our interest cost is low, and the 3 years' time is sufficient for us to implement our plan of either exiting a portion of it or developing it, and then that way we don't have to come back for any kind of a capital call with our investors.
Yeah, that's a great point. I think in multifamily we take higher leverage because it is supported by cash flow, so we are fine there. But on the land side, it is a non-performing asset, so therefore we have to de-risk by going lower leverage. But still, debt is always cheap, so we don't want to go zero debt. We will go around 30 to 40%. Exactly. Right? So great. Can you walk through the timelines when we plan to?
Yeah, actually we are launching the fund tomorrow, 15th September. And then subscription is open right away. You can go and fill up all the paperwork. And by end of the month, we will complete all the subscription process. And then it's ready to be funded. No? we will send you all the wiring instructions like we did before. You can go ahead and start funding.
And then we'll open for question and answers.
Yes,
Yeah,
awesome.
I think one question our investors will definitely have, Edward, and we wanted you to address it. In this, with the interest rates going up and where they are, what do you think? What's the best way that we can tell our investors, land is still a good investment, and interest rates are going to be up and down. It's good. That's always been the state of market. Interest rates were almost like 13% in the 90s, right? But given all of that, what do you think is the best advice we can give our investors on why we should continue to invest in land?
Well, it's a hard asset that's not going anywhere, and particularly with a business model that you can develop. I want to say develop your way out of. That's always the best case versus not knowing where the upside could be, where the downside could be, and then dealing with professionals that really know what they're doing. They have the capability, they have the track record. All those are great things, and besides that, really, land values have traditionally just continued to go up.
Exactly.
You look at the history of it; they just do, particularly properties that are well located within a school district, its frontage, its acreage, its zoning and entitlements. Those are the basics of what you look at, and then the way you make money on land is you buy it right. So you make money on the buy, and that's the general overall rule. You'll always make money on the buy if you're buying it appropriately. So.
That's perfect. Thank you for your time. Thank you again for your expertise. Thank you.
Thank you.
Thank you, Ed.
Yes, sir.
Really appreciate it.
Thank you. Appreciate it, sir.
Thank you.
Thank you.
Thanks again. All right.
Let's take a group.
Thank you.
All right.
Just take a group picture.
Yeah. Thank you, investors. Looking forward to working with you and then make this a very successful fund. Thank you. Have a good day.
Thank you for your time.
Thank you.
Thank you.